Okay, I think that is recording now, right? I guess that's recording. Good. Okay, so we actually have that recording now. So, the very first thing I want you to understand is this: is that this MM150, so this is not MC100. MC100 registration will be starting in January. That's a full-fledged mentorship course, and the rest of them that will be going for 10 straight days, every single day, back to back. But this one is just signals and the rest. So what's going to happen is we'll be having a class starting from beginner to pro level trading. And so all we'll be doing will be there will be a lot of summaries, right? And they won't be able to dive into things in like in depth and in depth like that, right? But then I'm going to drop all the keys, all the necessary keys that you need from beginner to pro level trading, right? So you're going to see the beginner aspect of trading, how to picture it in terms of the beginner level of trading. And then you are going to see how to picture trading in terms of the intermediary level, right? And then you are going to see exactly how to picture it uh, in terms of the professional level, right? And so, if you follow up with everything I'm going to say, if you are very, very fast at it, then you should be able to capture it and a lot of stuff should change. But then if you can't, it's why we're recording this also, right? You can easily watch it over again because this wasn't supposed to be recorded. Or just on the last minute, I was like, why not? Let's just record it, just in case, since everything will be kind of like very fast and some concepts here might be complicated, things like that for some people, right? So of course, not everyone, but for some people, we all have different assimilation skills and things like that. Okay, so let's not talk too much. Let's just dive straight to business. Now, the very first thing you need to understand when it comes to the beginner level of trading is you first of all want to understand okay you first of all want to understand what do we call it now? You first of all want to understand what the forex market is all about, right? And if you trade synthetic indices, you want to first of all understand what the synthetic indices market is all about. Right now, if you don't understand these things, well, technically it will be very difficult for you to understand any other stuff when it comes to trading, right? Now you'll be able to see candlesticks and all, but you just won't be able to know why it's happening the way it's happening, right? That's just the thing. So you just maybe you just had forex trading and the rest, and instantly you dive into studying candlesticks and the rest, and then you don't really understand what the forex trading is itself. Uh well, a lot of things will be difficult for you. Some things that are supposed to be the easiest form of stuff to get, they will just be difficult for you. And unfortunately, from from checking out a lot of traders, most traders skip that aspect. Like they don't really study what the forex market is itself. The like forex market is, or let's say the synthetic indices market. They don't. They just rush straight to chart. Oh, let me study this stuff and make money, right? But in real life, it doesn't work like that, right? A lot of things will be far, far easier for you if you understand what you are trading to start with. Now, we're actually having US 30 here now, right? US 30. Now, a lot of people know about US 30, Dow Jones Industrial, and things like that. Okay. Dow Jones, things like that. Okay, but what's actually US 30? Like you trade it, oh, it's very volatile. This okay, so what's US 30? Is Dow Jones. Okay, so what's Dow Jones? Now, a lot of people don't know about that. They just dive in to start trading it. Okay, so why is it called US 30 to start with? Okay. So there's US 100, right? So why is it called US 100? Why not US 20? Why not US 90? Why US 100? Why is it called Nasdaq? Like these are stuffs you need to understand, right? You need to understand how this stock indices markets work, or you're looking at normal forex, Euro USD and the rest. You want to ask yourself, why is it like that? Why is it Euro first before USD? Why are we even exchanging this Euro USD? What's the point? Or why are we doing all of these things? Like, these are all the questions you need to ask yourself when it comes to the beginner level, right? You need to ask yourself this question. Like, why are we even changing this stuff? Why am I buying this thing? Why is it going up and why is it dropping down? Now, these are questions that are very important. Now, in summary of all of this particular stuff, you just look at forex trading and you just prolong it and call it foreign exchange, right? in such a way where you are always in the market and you're doing what they call exchange of foreign currencies, right? Well, in some cases, the currencies are no longer foreign. In some cases, the currencies are now local, right? Like for our South African guys here, they tend to trade their ZAR and things like that to USD sometimes. And then now they're trading their local currency with their foreign with a foreign currency like USD or Euro, one or other stuff like that. Or our Nigerian guys here trading Naira to let's say USD and stuff like that. And then you notice that it's not like trading their local currency through to a foreign currency. Or some of our guys from the US here now they are trading, let's say Euro USD or something like that. So they are trading a foreign currency to their local currency or any other country using the US dollars, or let's say the British GBP now, like for England and those other guys, those living in the UK, they're trading their local currency to a foreign currency. But most times, a lot of traders they tend to trade two foreign currencies, like those not using euros and those not using US dollars, so they are trading it. Now, in real life, without the MetaTrader app or without the trading applications and the rest, the way it's supposed to be is this. You are supposed to source out for your dollars or you source out for, let's say, your euro. And so what happens is that you take your euro, you give it to someone and be like, hey, I'm giving you this euro. I want you to give me the equivalent of this euro in dollars. So you hold your euro, you hold what they call it, you give out your dollars, you take euro. Right now you are keeping this euro. You are hoping that the value of euro increases, right? Now, if the value of euro increases, that's what you're betting on. Good. So you are actually getting the euro because you are betting on it that it will go up, right? That's why, because why else? You want to make profit. But then if the euro doesn't go up, some certain stuff happens to the economy, maybe to Germany and other countries, and then the euro drops down. Now, if you want to change that stuff back again now, back to your US dollars, you notice that the equivalent has dropped, right? Meaning that you bought, but the market went against you and you lost your cash. Now, we are trying to leave the MetaTrader. I'm trying to show you how it works in real life. Okay, so that's exactly how it works in real life. Now let's take it even back before the normal currencies, right? They were already foreign exchange also. Now I have let's say a television set. Let's use that because that's what a lot of people will understand. And then let's say you have a pressing iron, right? And now we are trying to bargain that in the next few months or in the next few years, this my pressing iron will be more expensive than your TV set. So what I do is I already calculated it. So I give you my pressing iron. I'm like, okay, you give me your TV set, right? And now we exchange it like that. Now, after a year or two that I would have calculated, if my pressing iron is more than your TV set, it means that now I'm giving you back my pressing iron, and this time around you have to give me your TV set and something else. Maybe, I don't know, maybe a microphone or something else. But now I would have made profit because I got back my TV set and then you also added one electronic device for me. Now that's how it works in real life scenario, right? That's how it works. But then to make a lot of things easier for us, the MetaTrader application, just like other trading applications, had to be created, right? Now, if you're an intermediate trader and the rest, yeah, all I'm saying, and you already know it might be boring for you, but just hold on, right? So we're trying to move from zero until we get to 100. So remember, this is a beginner to pro level trading class, right? So just remain with me, right? Okay, now that's why the MetaTrader app was actually created to make sure that all of these steps they are as easy as possible. But now the problem now is that even though the MetaTrader app is available, you can't really take your $10 or you can't really take your $100 into a market where that is trading trillions of dollars, right? Nobody really cares about your $100 in a market flowing with trillions of dollars, right? Now, because of that, that's when we had brokers, right? So brokers, they have a lot of cash to spend, they have a lot of cash to deal with. So what they do now is that they help you, like they take your $100, they store it in their account and they help you boost it, right? So now they can boost it that your $100 by let's say 1,000, right? So if you multiply that, now you know how much the money you're having now, it makes more sense, right? And like, okay, you're having $1,000 and your $1,000 doesn't make a lot of sense. So the broker takes it and multiplies that by like 500, right? And now you're multiplying that by 500, you're now doing like 500 multiplied by 1,000. So in the market now, everyone's seeing you, they're seeing, okay, this guy is having how much now? Several thousands of dollars, or let's say like 500 by 1,000, that's like 500K, right? So they are seeing you, even though you have just $1,000, other people in the market, they are seeing you like you have $500,000, right? Now that's what we call leverage, right? That's what we now call leverage. That you are now having like 1:500, 1:1,000, and it's not going like that, right? Now, yeah, basically, I'm just trying to break it down as much as possible for our beginner traders here. Okay, now that's why we now have brokers, right? Because they can easily sustain these amounts of capital without any issues at all. Okay, now when we look at the brokers now, there are different types of brokers that offer different forms of leverages. There are even the ones that offer unlimited leverage, which I love using most of the time, right? Like you would already know, and I always drop the link. The link is already in a normal Telegram currently as we're speaking, the general group there. And so those type of brokers, which are very, very few, right? Very, very few, they basically bet on you and tell you that, hey, you can have all the money you want, all the money we have, you can trade as much as you want. And so when you're trading, you notice that your margin will be your margin won't be affected, nothing will be affected. But let's say when you cross $1,000 or so of profit, then the margin, the leverage drops to 1 to 2,000, right? So at first, when you are trading, let's say you're having $10, you notice that you can put a billion trades if you want, right? Even a trillion trades, they don't really care. They are there to sponsor all the trades, right? And then when you hit, let's say, like $1,000 or so, then it drops down to like 1 to 4,000. Sometimes it drops straight to 1 to 2,000. Sometimes it can drop to 1 to 1,000, right? It just depends on the market fluctuation that day. Okay, so that's how it works. And so you know about brokers now. You know all the basics of the Euro USD and those stuff. You understand why they are like that, right? And now the other stuff is to understand what benefits does it create now. Okay, now either you like it or not, as a forex trader, you're actually helping the economy of your country, right? Now, especially when you're profitable, you're actually helping the economy of your country. It might not be a lot. It's not like you are helping it like boosting your economy yourself, right? But you are actually contributing a lot to your economy also, right? Because all of these stuffs, locations are tracked, all of these stuffs in the economic market, accounts are balanced all the time. And so even if you see yourself as you're just a little trader, just someone trading in your room, at the end of the day, when they check through the market or at the end of the year, if you go read your economic calendar of your country, you notice that they add that forex, the amount of forex revenues, like the amount of forex revenues, your revenue, the amount you actually made is actually part of that stuff. Of course, most of the percentage of it will be from other stuff like selling of crude oil and selling of, let's say, like cocoa and one other stuff, natural resource. Of course, a huge chunk will be from there, but your online forex trading is also part of that, right? So when you are trading forex, even in as much as you're trying to make profits for yourself, you are actually generating revenue for your country also, right? Now, having to understand those beginner terms and all those stuffs. Now let's switch now into the higher end of that beginner, which we can call intermediate level, right? So a lot of information will start changing now, right? Okay. Now, when we get to your intermediate level, what you have to understand there now is this, is that you have to now run through the candlesticks, right? You now have to run through the candlesticks. Of course, on your beginner level, you run through the candlesticks also, but there's no need for that. Let's just merge everything with our intermediate, right? So, okay. Now, on our intermediate level, we want to run through the candlesticks, want to see exactly how the candlestick works, and want to play around it and want to understand why the candlesticks are going up and why they are going down. And we want to understand the levels of the candlesticks. We want to understand what pushes this candlestick to go up or what makes it to drop down. We want to understand all of these factors, right? Now, the very first thing you want to understand, especially let's say you are just stay on the higher end of the beginner or you are just in the intermediate level, is this: you want to be able to monitor the levels where the charts or where the candlesticks hit and goes up, or where the candlestick hits and drops down, right? And then number two, you want to understand that the only factor of trading is not just candlestick, right? Candlestick is just one of the most popular methods, right? Of course, we have line charts, we have normal bar charts also. We have what's it called? Is it the thumbprint? Some people call it thumbprint, some people call it fingerprint. It doesn't matter. Anything is just a print that is actually calculating the amount of trading volume every single day, right? So we have that also, right? And we also have which okay, those are just the major ones. But then the one that is actually so common that a lot of retail traders use, retail. Remember, I'm underlining the word retail. A lot of retail traders use, because institutional traders, they some of them don't use candlesticks at all. That's, you can go to some banks and never see any candlesticks on their chart, right? All you can just be seeing would just be normal print from the other blocks, candlesticks, and all those stuffs. That's what you just be seeing. But yeah, but then a lot of retail traders, they get to use the candlesticks and the rest of them. And using the candlesticks is actually very advantageous for us, because you can easily study the patterns and you can easily calculate the regions where the market should drop down and the regions where it should push up, right? And it's actually so easy because a lot of people are actually seeing that exact same thing you are doing. And so, what controls the market now? What controls this market to drop down, and what pushes it up, and what makes it to start dropping down again? What sustains it on a particular level? Are just three major factors. The first factor is actually the emotional factor, right? That is being created by normal traders like your retail traders, right? So, traders, they tend to buy, right? A lot of people, let's look at the level now. Okay, let's see this level. I'm not analyzing anything yet. I'm just showing you this stock pushes up towards particular level. And so they're kind of like, let's say there are a lot of resistance or whatever around the spot. And so a lot of traders are seeing this particular spot. And so a lot of traders storm into the trade, they bombard this particular spot on sales. Because of that, that means that the selling power is not higher than the buying power, right? Now, because of that, this market starts dropping down. That's why. But that's not the only reason, right? Now, the second reason, especially on the normal Forex market and normal, let's say, stock indices market like US 30 and US 100, what actually pushes it now is now also terms of the economic factors around it, right? Like your US 100 is actually called US Tech also on NASDAQ. The reason is because it's actually a combination of 100 tech companies that are actually combining together, like your Tesla and the rest of them, Amazon, just Amazon Techs, and all of those other tech companies. That's, I think, even PayPal and Paystack and Stripe and all of those stuff. I think they are all part of it. And yeah, and then even though the ones that are part of it are the ones in the US, is why it's called US 100, not just all the tech companies around the world, right? And then the US 30 is now just a kind of like a broader form of it, just 30 major companies that are in the US, right? So whatever is happening to the economic state or the revenue state of these particular companies also tends to affect the chart, right? Now, that's what's happening there, right? So those are the two factors. Right now, the third factor is actually the what do you call them now, is actually the economic factor. And those economic factors, they're actually controlled by the big players, or who we call the market makers. So number one, the retailers, normal people. Number two, the economic factors or the economic situations of these companies that you're actually trading. And number three is actually the market makers or the institutional players or the big players in the market and things like that, right? So these are the three major guys that actually control the market. And then there are some special scenarios of, let's say, like XAUSD, which is also a gold, things like that. Now, gold is actually being controlled specifically, or most times, on almost, okay, let's say over 90% of the time is actually controlled by economic situations, right? Now, because of that, if you check out the gold chart, is is most times bullish, right? I don't want to open that. You can open that on your chart, but if you check it out, it's just is on the highest high and it still want to go up, and that's a chart that we technically, well, it can go down in the eyes of retail traders like us, but then in real life, it's almost impossible to go down. It will always buy, right? It will always buy, and because of that, big players, they tend to use it a lot as an advantage. They know that even if it retraces, they are already having a lot of cash in the market, so it can't actually affect them. So they will forever be making profit in it. So you will lose on gold because of the amount of your capital, right? Because you are just trying to go in, pick some cash and leave. But then the big players that are already in there, they can literally hold the trade forever. If you check out the gold chart, you understand what I'm talking about. You just go on the daily or weekly time frame, it will make more sense to you, right? Because it will always keep pushing. Now, the reason for that is actually because it's a national asset. So it's classified under the category of a national asset. So that's what naturally boosts the economies of countries, right? And things. The higher gold you have, the more power you have, and yeah. So that's how it is, right? So the power of gold or like will always go up, and that's what we call the original currency, right? So what you're having, sorry to say, in your country or in my country or whatever country, what you are spending every day is just like they are just like bits of papers, right? So just something that can be printed. If you have the machine, you can literally print it out, right? So the original currency is the gold, right? So that's what most currencies are actually. Not all currencies. There are countries that don't that their currencies are not backed up by gold, but most of them, at least the major powers of the world, they are actually backed up by gold, right? So they print out currencies according to the amount of gold that they have. At least that's how it's supposed to be. Any other thing that occurs, well, we don't know about that, but the way it's supposed to be is printing out the currencies according to the value of their gold, of the amount of gold in the reserve, right? So that's exactly how it works. So gold is actually the original currency of the world, and so because of that, it always goes up, right? And if you track it back before, you don't buy gold with cash or things like that, because before they just cut it in bits, and then they call them coins, and they mix some, they use silver for some, and then they call those the lower denomination of the coins. And so I give you amount of gold and you give me amount. That's how it was, right? So before the formation of the notes and all of these stuffs, right? So that's actually the original currency. That's actually the original form of a currency. Because of that, it will always go up, right? It will forever go up, right? So if you buy gold, you just wait and it will always go up. You almost not running a loss, except you just want to do a quick flip. You want to buy and quickly leave the trade, or you want to sell and quickly leave the trade. Okay, now haven't looked at this particular stuff. Now you understand from all the stories or all the scenarios, you understand everything that controls the market now, right? Good. So if we look at all of these stuffs now, it all summarizes into one single form, right? Or one single body. And that stuff is what you already know, is what we call the psychological control, right? Now, so the entire market now, if you combine all I just said now, if you combine all I just said, you'll notice that they all merge back into one single form. And that single form is what we call psychological control. The best way of trading the chart is not analysis of the chart, right? That's what you would have heard a lot of times. That's what we will have. Now, some of this information I'm giving is why I didn't want this class to be recorded, because I don't like information like this going too far, right? Some of these things we don't see them on YouTube. They just they are just locked up we just do them and we lock them up, and that's it. So there are a lot of information on the MC100 also that we just give. After that, some of those stops are not recorded, some are recorded, some are not, right? Because MC100 is actually very, very important stuff, and that's where we actually groom a lot of students that will send it out and things like that. So it's actually locked up. And so what we're just trying to give now is just a tiny bit of it, and that's why I didn't want this to be recorded, but we'll just record it. I already said that. So now, the main form of trading, or the way what determines your success in trading, is not just the amount of knowledge. In fact, the amount of knowledge you need to have, let's say, it's just like 20%, right? It's just like 20, because think about it. Don't you know support and resistance? You know the stars, don't you know how to draw trend line? I bet you know the stars. If you're a complete beginner, you're not even up to the intermediate level at all. You know a lot of these things, right? Now, if I ask you, you know a lot of these things. The only difference now between a person that's profitable and you most of the time is the psychology, psychosis. I don't know how to explain that now. The just the psychological advantage that the person had. Now, let's take it back to basics now. Now, 80% of your success in trading is dependent on how much you can control the psychology. Now, the reason for that is because this entire chart you are seeing, they are all grouped under the aspects of the psychology, right? Good. The reason why the big players are controlling the market is because at that point in time, they feel like storming into buys or they feel like storming into sells. They've looked at it and they're like, okay, I think this stuff should go down. And then they can, Elon Musk is calling Jeff Bezos, hey, how far? How's it going? I'm thinking on putting $100 million into US 100. What do you think? Jeff Bezos is like, yeah, I think it's cool. I want to put 500. And then Jeff Bezos is calling Warren Buffett. Warren Buffett, you are the legendary trader here, right? Nobody has broken your record. What do you think? And Jeff Bezos is like, I feel like putting $1 billion in now. And now all of these guys, they are all working based on emotions and sitting down on their round tables or just making phone calls and then they're just discussing about the stuff. And from there, Warren Buffett calls a bank and be like, hey, like I'm just thinking, I'm thinking on just I'm thinking on placing depositing $1 billion now. I'm betting on this particular stuff. Now, in summary of all of this stuff, we discover that it's all a basis of psychology. If you draft everything and you streamline it, right? It's all a basis of psychology, on a basis of psychology. And then you try looking, okay, how about the economic situation? Oh, you'd be like, no, how's that related to psychology? It's just economic situation, right? Okay, it makes sense. Now let's track it out now. Now you look at this particular stuff. Now, I'm having, let's say, crude oil and I want to sell it to get let's say a lot of dollars now. Now that now depends on my amount or my level of negotiation, right? How much crude oil should I sell? Should I sell lots or should I sell just a little? Or how will this stuff affect the economy? Now, people will still sit down, your governments, those in your parliament and the rest in your various countries, they will sit down and discuss about it. Or let's say it's not crude oil, let's say your resource is gold or your resource is agriculture or I don't know, but you know your resource in your country. So your parliament will sit down and they will discuss about it. Okay, let's do it like this. Let's sell this amount. Let's sell this. If they make a wrong decision and then they sell, let's say, too much or they sell too less and the rest, that would also reflect on this same charts that you are looking at. So if you join everything, you streamline everything at the end of the day, you discover that at the end of the day, it's usually controlled by psychology, at least over 80% of over, if not over 90% of it. You can literally sit down and regulate that and brainstorm that yourself. And so, if you should notice that the entire chart is controlled based on the psychology of different individuals and different people around the world that you've never seen in your entire life, if you trade it without considering the psychological aspect, you just want to consider the levels only, like you hear all the time. Oh, okay, so this is a buy. Oh, you see this level is a buy, or this level is a sell. If you want to just look at it like that, then sorry. Yeah, sorry. It will always take you out, right? It will always take you out. So what you want to do is you want to consider the levels and you want to be able to understand what other people are thinking, especially the big players. Okay, now that's one aspect of the psychology. The other aspect, if you notice, we're not looking at the chart yet, we're just talking about theory because if you can get that, the other things will be nothing for you, right? We're trying to climb up gradually, just gradually. We're not going in a rush, right? Because after now, it's not like we're going to have this class again. So you just have to relax and just be patient. So we just go around it and you just spend a little time and you thank yourself for it later on after we're done. Okay, so now that's the stuff. Now the second aspect of psychology is this: is taking a lot of profits or taking a lot of losses. Now look at it. Now the amount of profit you actually make from the market does not matter. I know you've never heard me say anything like this before. I know. It's why I didn't want this class to be recorded, and it's why you won't hear this stuff on YouTube, right? The amount of profit you make from the market, it doesn't matter. It's nothing, right? And then the amount of losses you take also, in as much as you don't like what I'm saying, it also doesn't matter, right? You don't have to like what I'm saying, but you just calm down and you understand where I'm going to. Right now, the amount of profit you make doesn't matter. Why? The reason is this. You make 10,000 bucks on the market today, let's assume that, and tomorrow you're trading and you lose it. Is the 10K still there? Okay, it's not there anymore, right? The money is gone, right? You should be able to relate to what I'm saying. Let's say you're growing an account from 100 to 500 bucks and you're trading, you're making profits, you're happy, you're trading, you're making profits. It's no longer 100, it's not 200, it's not 300, and let's say it's not 400. Your target was 500, and something happened, and the entire account is gone. Though the profit you made is no longer there, right? It's gone, right? So, was the profit the main thing? Think about it. Or was the profit the main thing? No, you were trying to make profits. Yeah, fine. But then after losing the profit, what next? Okay, does that stop you from being a forex trader? Does it stop you from being a trader? It doesn't, right? Life still goes on, right? Okay, now you're trading that $100 and you lose the money, and now from 100 you're now having $50, and from that 50 you are now like $10, right? And then it takes you out. Let's say it takes you out, right? And you're back to zero. Okay, now what happens next? It stops you from being a forex trader? No. Now, what you need to understand is this. The very first thing of a forex trader is not how to make profit, and it's not running away from losses. Because I'm just going to tell you a story of a student from MC 100. That was from the last MC 100, right? That actually just occurred, that we just ran it up like 2 months, 3 months ago, the August, right? That was season 5. It was very, very interesting. Now, this particular student was done and then started trading. And then in trading, the student discovered that he was actually taking losses and the rest of them. And so I told him that you're focusing more on making profits and also you're running away from taking losses. Just apply every single stuff we learned from our MC 100 classes, revise the videos that we actually recorded and everything, and just trade blindly like that. Follow the stuff, follow all the normal psychology levels we actually taught, follow all the normal follow all the normal internal and external levels that we actually covered, follow all our principles of trading, follow every single stuff that we covered, and then come back to me after 30 days and tell me the results. Now he came back and then he showed me his history, and his history, they were having a lot of losses on the history. But then at the total of the history, now the total, you're having history, a lot of trades, and then you check the top of the trades, and then now you're seeing the combination, like the plus and minus of everything, right? And then the plus and minus of everything was going into thousands. And then the guy started from just roughly 1.5K though. And so if I should remember, I think maybe around 15, 16, 17K or so, and that was within the range of that 30 days. But it was on a demo account. But even at that, even though it was on a demo account, it was still very impressive. Now I tried going through his trades, and then I realized that he followed to details exactly what I told him. He wasn't concentrating on profits, he wasn't concentrating on losses. He was just concentrated on trading based on the principles of trading. That was all, right? So he would take a lot of trades and take a lot of losses. But then when he takes some trades based on the normal principle of 3:1, why we have three take profit level, he works with the normal 3:1, and boom, he discovers that for every loss, for every profit he takes, he makes over 3 times of the losses that he would have taken. And so because of that, he was always ahead, right? So he was always ahead. So he can take about 3 losses repeatedly, but then the one that goes into profit, he goes about 3 times ahead of all of the stuff. And so that's what he was using. And I was like, so why are you still trading on the demo account? It was like, well, because I'm just practicing. Now that guy is actually so ahead now when it comes to trading. Of course, that's just one of the stories. Now, if we boil it down now to straight to business of what I'm telling you, if you concentrate just majorly, because think about it. So far, so good, you've been concentrating on making profits. Have you been making, think about it. Have you been making the profits in excess? Think about it. Okay, you've been concentrating. Okay, that's the right way to do it, right? And you've been concentrating on, oh, let me just make profit. Has it been working for you? It's I don't think it has, right? Or maybe for some of you, right? Maybe. Okay, since you've been running away from losses, oh, I don't want to take losses, I don't want to take losses. Now, has it been working? I don't think so, right? Good. Now, if we look at it now in a what I call, if we look at it now in a standard way or in a standard procedure, What you can literally see now is this. Okay, I don't know what's happening on the screen. Okay, let's take that out. Okay, I don't know. Okay, okay, so who is writing stuffs on the screen? You can drop messages on Telegram just in case, right? You can drop message on Telegram. So you don't you don't have to write any stuff on the screen, please. Okay. So I don't want to disable that also, right? If you keep writing, I might have to disable it. But if you have any question, you can drop that on Telegram, right? You're very free to drop that on Telegram, but just don't write here. Okay, just don't write here, so I don't have to disable that. Okay, now let's go now. Now, the other stuff you have to understand now is this, is that when you're actually trading, if you concentrate on just the principles of trading, now what I'm saying does not stop you from having targets. Okay, because we are getting there now. Remember, we're still just speaking on intermediate. We get to the pro level now, and all the information will change. But I'm trying to give you a lot of basics now. So you are not confused. So what I'm saying actually makes a lot of sense, right? So you are not confused. Okay. Now, look at this particular stuff. When you are trading, the very first thing you want to look at is this. What's happening on the market currently? No, it's not relax. Just ask yourself, what's happening on the market currently? No. Are there people making losses? Are there people taking profits in the market? Because look, if you ask pro traders like Warren Buffett has taken far more losses than some people can ever make their entire life. Maybe most people can ever make their entire life. Don't play with Elon Musk that lost was it over $10 billion or so within 24 hours, right? Well, you've not even made up to $1 million, right? And then a person is losing over $10 billion within 24 hours, right? So, and he's still a billionaire, right? He's a billionaire, right? Now, it doesn't make him like, oh, he's not smart in his trading on the rest. Is that what it means? It's Elon Musk, right? He's a multi-billionaire, right? Now, the thing there is this is that his focus is not on making profits or taking losses. He doesn't want losses. Doesn't oh he wants losses. He doesn't care. Of course he cares, but that's not where his focus is on. Right? It's not where his focus is on doing the right thing. Right? Studying the right information, applying the right principles. So even though he just lost $10 billion within it. It wasn't even up to 24 hours. It was just like within 3, 4 hours. You can check the news. Me, I think it's even more than $10 billion that he lost, right? And then it didn't flinch, nothing changed. He just kept doing what he was doing, nothing changed. He didn't go and sit down and he was not depressed. Oh, I just lost this amount. No, he just continued doing what's supposed to do, right? He just continued applying same principle. And then he's still the richest man in the world now, right? He's still the richest man. Now, if you reason that now, you reason all the top traders and all of these people, you now tend to look at it that all of these people are taking losses and all of these people are taking profits. So it therefore means that if I am trading, my focus is on studying and understanding the principles, right? Studying and understanding the concept, the original concept of trading. And if I follow that concept, I am 100% sure to make profits naturally. And so from there now, we now swap now into the professional level. Now on the pro level now, we'll now be looking at all the major levels in the chart, right? We'll be looking at all the major levels. But then just listen first. Now, in the pro level now, this is how it works. You look at the chart, okay? Now, after looking at the chart, the very first thing you want to understand is where are the big players trading towards? Like, what's the direction of the big players now? Now, you discover the direction that, okay, maybe the big players are trying to sell on the market. And then or you can say, okay, maybe the big players are trying to buy in the market, right? And then you discover the areas that the basic traders or just the normal retail traders are the direction they're planning on heading towards. And most times you don't want to go towards the direction of the retailers, right? You want to go towards the direction of the big players, which are the institutional players, things like the banks and all the multi-millionaires and billionaires and so in the world. And so if you check out those levels, most times those levels are what we call our liquidity, our areas of liquidity, right? Because those areas, they always liquidate a lot of traders. Just look at it like that, right? Now, look at this. Now, what I want to do now when it comes to taking trades now on the chart is this. First, I want to I want to analyze the levels. Let me look for a perfect spot, normal perfect spot. That should be very, very nice and should be very, very smart. Okay, let me see. All right. Okay. Okay, let me remove this first and let's just quickly look at some of this now. Okay, good. Good. So all of those stuffs are out of the way now. Good. All right. All right. Good. Okay. So now let's go straight to business now, right? Possibly the information that you have been planning to hear since. Okay, let's go straight to business. Number one. Now I'm just going to show you a lot of stops now. And if you don't get some of the stops I'll be saying, you can watch this video over again. Let's go on now. Good. Now, the very first thing you want to understand is this, is that when you are trading and when you are trading with someone, these are two different things. This is where I'm going to. The very first thing is this now. Let's assume I want to set a target for myself. I want to trade let's say I want to trade up to 10,000 bucks. And let's say I'm having just 100 bucks, right? That's exactly what I want to do. Now, what do I do now? Watch. Now, what I want to do is this. I want to keep my $100 and then I'm thinking on, okay, I said $100 to 10K, right? Good. So I remember. Now I want to put my $100 now into the market and I'm targeting 10,000 bucks. Now, after setting that target, now the very first thing I want to do is this. I want to map out my chart, right? I want to map out my chart. And then the very first thing I want to tell myself is this, is that I want to be able to trade just within this region. Now, within this particular region, just this region, that's what I want to trade, just this region. Now, what I'm actually telling you now is I'm actually telling you the principles of scalping and flipping accounts. That's what I'm about to tell you. Now, after that, I'm going to swap into holding trades for longer period of time like day trader, standard day trading. But what I'm about to tell you now is the standard procedure of flipping accounts, any account of your choice, right? Now, look at it. Now, the only problem about flipping accounts is that when you are trading it, you need to be very, very fast, right? Speed is the priority here, right? When you're actually trying to flip accounts like that. Now, let's assume I'm checking out this chart and then I want to trade around this region. Let's assume that this chart is still around this region. Now, I look at this particular region and then I try figuring out the formation that is there. And then in figuring out the formation that is there, I have to make sure that it's confirmed by at least 5 different strategies. At least 5. At least. It can't be below that, right? You can use it as much, maybe up to over 5. It doesn't really matter, right? But then it must be confirmed with at least five trading strategies, at least 5. Now, after confirming with at least 5, if you're checking the first one checks out, the second checks out, the third checks out, and then the fourth doesn't, and then the fifth doesn't, it's done. You leave that particular chart, you go to a different chart. But I don't want to flip to any chart now. I just want to stick here. But then you flip to another chart. Now you have different charts in the market you can trade, different ones. So you don't have to cage yourself into one particular chart, right? Now you pause and then you check out the other chart. You look at it. Let's assume now that this particular spot is where we're looking at this time around on a different chart. We're just assuming, right? Now and then you check out this particular chart. You check your first strategy. Does it balance? Yes. Second, does it balance? Yes. Third, does it balance? Yes. Fourth, does it balance? Yes. And then the fifth, it doesn't really balance, right? You leave that chart and you go to a different one. Now, you'll be like, oh, it's taking time. It's not. Remember your target. Your target is massive, right? You're setting a target from $100 through to 10K. Or let's drop it down. Let's say $100 through to 1,000 bucks. Let's leave it like that. Now you're setting a target from $100 through to 1,000 bucks. That's like 10 times the amount you're trying to hit. And so you know that it will be worth it. So you don't have to rush. You don't want to lose. You don't want to donate your $100 back to the broker, right? So you just chill and you relax. And so the next thing you want to do now is this. You want to rush to another chart and then you want to check out a different zone again. And you make sure you check again the first, the second, the third, the fourth, now the fifth. Now, if the fifth one actually, if the fifth one or all 5 strategies you are actually confirming it to it, if they all fall in place, then you are good. Then you can focus on that chart and drop down now to a lower time frame, right? You can actually just work with a lower time frame. But let's look at the fact that you checked for that day all your charts, you checked all the major charts that you're trading for. Like us, we trade US 100, US 30, we trade technically in it, we trade XAUSD, right? And most of the time we'll go to our synthetic indices also like a boom and crash and volatility also to trade. Now let's assume I check out all of these stops And I'm not so sure about it. Remember, this entire chart works based on psychology. And I'm not so sure about the movement. I'm not so sure about how this particular stuff is working. Now, what do I do? Yeah, okay, you might have guessed that. I leave the chart and go back the next day, right? Now, it's why you don't trade the chart every time like that. It's why you don't try flipping accounts every day like that, because flipping accounts is not the normal of trading. It's not. It's actually over the norm of trading. It's not how it's supposed to be, right? Because of that, you have to make sure that every single stuff has to be as perfect as possible, right? Because that's not a day trading concept. Flipping accounts is a lot, it has to do with a lot of risk and things like that. So if you want to trade, you have to make sure that you subdue the risk to the lowest minimum. Now, that's the first thing now you have to do. Now, let's assume now, let's go back to the fact that we found it. Let's say the next day now, we check the next day and then we're able to find this particular formation here. Good. Now, all I just need to do now is I want to expand this, my formation now. I want to expand it and then I want to drop down to a lower time frame, right? I want to drop down to a lower time frame. I don't want to drop down in real life now because I don't want to look for this particular style. I drop it down now, start looking for the spot. But then let's say I drop down to my 5 minutes time frame, and now this is my 5 minutes time frame, right? Like I don't just want to change the time frame. I don't want to start looking for the stuff. I don't want to waste that time. But then let's assume we drop into a lower time frame now, right? So let's say 5 minutes time frame. Now, all I want to do on my 5 minutes time frame now is this. I want to check out all the levels around that region. I want to check out my internal resistance levels, right? I can't really explain much on those particular stuff. Those things will take far more time, right? Those stops are under MC100. But then I want to check my internal resistance levels around all of those spots, right? And then the second stuff is I want to check if there are any horizontal levels around those spots, right? Around the region, right? Number three, I want to check out for all the rejection levels, right? Number five, on is it number four now? I want to check out all the candlestick that is actually taking charge around the region. Is it bullish or is it bearish? If you check it out, you should be able to crack it out, right? The candlestick that is taking charge around this region. Now, after that, the next thing I want to check out for is I want to check out the economic situation. Are there news happening currently at the spot? Is there any form of news or something that's occurring? Now, if there's any news, you want to also bank it and just run away from that trade. If you notice, for every single trade, you see that when we're trying to flip accounts or anything, they are never within the news period. They are never. If you check out, you might have not noticed, you can run through all our videos. They are never. We escape all of those things. And if you notice, most of them will also never drop trades on any of those periods. It's because it's actually very dangerous. You don't want to take your $100 into a place where the news is actually extremely volatile. You go in, it to take you out very fast like that, right? Extremely fast to just take you out. Now, that's for that. Now, the next thing you have to understand is this: is that when you're actually trading, the okay, let's I know we're saying $100 through to $1,000 before, right? But let's use $1 through to $100. Now, you understand what I'm saying to make more sense. That's why. Okay, now let's assume I want to trading $1 through to $100. And so what I'm doing now is this: when I place in my $1 first, now it's actually kind of like a bit tricky for me, right? It's kind of like, okay, $1, okay, it's cool. $1 is just $1, right? And then I know that, let's say I have $10. I have $10 in stock, and I'm like, oh, I'm just putting $1. I'm not really feeling it, right? It's just normal. I'm not feeling anything, right? Because it's just $1 I'm putting, right? $1, like it's just $1, right? Now, because of that, I can easily, especially let's say I'm using unlimited leverage, I can place as much trades as I want because I know it's just $1, right? It's $1. It's just $1, right? I have almost nothing to lose. Now, because of that, I can stock in a lot of trades into this particular stuff. And then it pushes it from, let's say, $1 through to like $10, right? $10. And now I'm having $10 after closing. Now, after closing my $10, because my target at first will be $10, it won't be $100. I said that on a free YouTube video, even that was like a two videos behind, 3 videos behind, I actually explained that stuff. Right now, I'm setting my target for, let's say, $10, right? Now, and then I'm able to hit the $10 from my $1. Now look at it. Now the reason why that was easy for me is because I was using $1. Now look, now my second target now, let's say, is now to $50, right? Now I'm not having $10. I'm no longer having one. I'm not having $10. So I'm going to treat it exactly as $10. I'm going to forget that I started from $1 to prevent unnecessary gratification to myself. Oh, I just push this stuff. No, so I'm going to assume now that my capital is now $10. It's not $1 anymore. My original capital is now $10. Now that's the assumption of my brain, right? That my original capital is now $10. So if I lose that stuff, I'm losing $10. That's the amount I'm losing. You get it. It's no longer, oh, this profits. Oh, $9 is profit. I can just lose $9. It's no, it's not like that, right? It's not like that. My original capital now is $10. Now I treat it like that now to make $50. So what I do now is I just simply go through the chart again, right? I run through the chart, I run through all the levels, just like I mentioned. I run through all of them again in cycles. It's just that most times when you see these videos, all of these things are done within the brain, right? So you don't really see these things. You don't only see one thing showing you just one thing. Oh, so this is the level. No. Every single levels are processed within the head, right? And then we just concentrate on the topic for that day and just mention only them. But every single level, every one of them is accounted for, every single one of them. Now, after that, now what I'm looking at now is this. I know that the higher I go, the higher the risk. Is why you can't keep trading consistently like that. Because if it was like that, Elon Musk will be learning, right? So you just pass Elon Musk easily and just be like, oh, this Elon Musk, you just make maybe $1 billion a day and it's easy, right? If you can go like that. The difference is that the higher you go, the higher the risk it becomes because you are using similar risk. Remember, you are risking a lot to make $10. And now for you to hit $50 within a single trade, from $10, you have to still risk a lot, right? Now you risk a lot. Now you take the trade, boom, it actually hits your $50, right? And now you're happy. Now you want to trade that $50 through to $100. You have to risk a lot again, right? Now, the amount of risk that you're actually placing on your account is actually extremely massive. So let's assume you hit your $100 and let's say you want to hit $1,000. Now, if you notice the amount of risk is either higher or is consistent, right? It's just your leverage will drop when you cross $1,000, but then your risk to actually hit that stuff, especially within a short period of time, your risk has to be consistent. And usually the risk is usually massive, right? And because of that, you can't continue forever, right? You can only get to the point because the higher you go, the higher the amount you can lose. Now, you understand what I'm saying now. At first, you can lose just $1. And then when you're moving, if you are trading based on the same risk and based on same stuff, you can now lose $10 easily. $10 is gone easily. Boom, it's gone, right? If you make any funny error, you miss one of the levels or anything, and those levels, those that have gone through MC100, I guess we have one or two guys here also, one of two of us that have gone through MC100. They actually understand most of the levels I'm talking about. Now, you analyze all of these particular levels very, very well. And so if you miss just one, it can take you out, right? And then now you are losing $10. Remember, we are not treating at $10 as profit. We're treating it as an original capital. And now you are let's say you hit like $100 from that. Now you hit $100. Now you're trading based on same risk because you need to hit $1,000, $1,000 as fast as possible because that's just a way of scalping, right? That's just a way of flipping accounts, right? You have to use a lot of risk, right? Especially when you're using unlimited leverage, things like that. And so now if you're trying to push $100 through to 1,000 because the risk you are applying is actually also a lot, it means that it's very easy for you to lose your $100 and you just go back to zero. And then now you're left with nothing, right? And let's say you were successful, you were able to push it to $1,000. Let's assume that. And now you want to try hitting $10,000 and now you're trading. You hit 5,000 and now you're trading because you are still exerting a lot of risk in the market. It's actually very, very easy to lose over like 5,000, 6,000, 7,000 because of the amount of risk that you're actually exerting on the market to hit $10,000. Now, because of that, the higher you go, the lesser you can flip accounts, right? The lesser you can flip. Now, the reason why I'm telling you this is so you understand that you can't flip accounts and be a billionaire, right? You can only, the higher you go, the more the possibility of you losing the amounts that you're trying to flip, right? So if you notice, most of our videos, they end with, let's say, 10K, 15K, 20K, around that range, right? Because when you start crossing that range, it becomes even more and more dangerous, right? Because when you hit 20K and you're trying to, oh, let me just hit 50K. Even though we have a video where we crossed over 50K or so, right? There's a video like that. Yeah, we crossed over 50K. But then the higher you go like that, the easier, and you don't want that, right? The easier it is for you to lose your money, right? Now, and you don't want that. So because of that, if you are just starting to, let's say you're just starting to get into the pro level trading and trying to flip accounts, when you trade, let's say like your $10 and you hit $100, relax, just chill, withdraw your money, use it for yourself, go and get what you want and things like that. And with time, it will get to a point where you are no longer just pushing, let's say, to $100. You cannot push up to 500. You relax, you use your cash, you do whatever you want, you do your stuff and the rest. Another time, you can keep practicing and you keep trading and the rest of them. And now you can easily risk to lose $500 and you can trade, let's say, the $10 through to 500 and you can, oh, let me hit 1,000, and then you can easily relax from there again. Oh, I hit 1,000, and then you can be stopping at 1,000, and then gradually that's how you go. Now, because if you go like that and, oh, let me make all the cash and the rest, it will get to a point where you would always lose the money, right? Because you are using similar risk, right? You're risking a lot to make a lot, right? And that's why it's not finite. That's why it's always finite, right? You can't go infinite like that. If it was like that, well, you just trade and become the next Elon Musk, right? You just take, let's say, $100 and trade 1,000 and 10,000 and 100,000 and a million, and then just keep going like that. Now, the reason why that is not really, really very, of course, if you keep practicing and keep practicing, why not? You can hit in hundreds of thousands, but it's just that the higher you go, the more trades you take, and the rest of them like that, the higher the increase in the risk that you actually exerting on the market, and the easier for you to lose a lot of cash at the same time, right? So just one error can take you back to $0. Just one error. So yeah, at $10,000, you're trying to hit $20,000. You're trying to flip the account to $20,000 because you're actually placing a lot of risk. You make one single mistake, that $10,000 you're having can go straight to $50. And it can go even straight to $0 because you are placing a lot of risk in the market. And so I guess you actually understand how the flipping of trades and the rest works, things like that. And I already told you all the major levels you need to understand, right? You check out maybe the trend first of this particular spot. After figuring out the level that you want, you check out the resistance levels around this particular spot, the horizontal levels. You check out the candlesticks that are actually, yeah, is it bullish? Is it more of a bullish stuff? Is it more bearish? And the rest of them, things like that, good. And then you check out the rejection candlesticks that are actually occurring, where they are occurring, and things like that. You check them out, and then you're able to predict the final movements, because this stuff is 15, but it goes to 5 minutes and then to 1 minute time frame, and then within these time frames, that's where you start going into your trades and start shutting them out. Okay, now that's for that as regard flipping on accounts or as regard scalping of trades and things like that. I'm saying that for those that love scalping and the rest of them. Now let's boil that now. Let's hit straight to our day trading. That's a normal standard day trading, normal standard day traders. They don't maybe like flip accounts all the time. They just trade normal, take normal trades, normal standard take profits, normal standard stop loss, just normal standard day trading, right? Now, this is how it works. Now, the very first thing you have to understand is not every day will be good, and not every month will also be good, right? It doesn't work like that, right? Some months will be very good, some months won't be very good, and it's just how it is. Now, like if you check out our September wasn't very good. I even said it on YouTube channel a lot of time. And our October, the first 20 days of our October was actually perfect. When I mean perfect, we didn't take even a single loss. I don't think we took any loss for the first 20 days, maybe one. But I doubt that. I doubt there was a single loss. And so towards the end of the October, now the market has not been very friendly. It has not been very friendly. So there are days like that. And so the days where you are very profitable, it compiles, and then at the end of the month, the mission is to always end up in profit. That's the mission, to always end up in profit. So of course, some days will be good, some days will be bad. That's just the stuff about day trading, right? Because day trading for scalpers, they don't really have that time. They already know how this stuff is done. They just storm into the market with their tiny amount of capital. They flip it to as much as they can. They're out of the market. They can't even decide not to trade again for the entire month. Like, but they are done already. The person flip $10 to a thousand or 10K, like 10K. That's enough for a normal person to just stay like, that's just maybe just chilling, maybe alone, just living his life. 10K is enough for the person to do all his stops. Like, yeah, just do all the stops and things like that. And it's just cool. And yeah, so that's for flippers. But for day traders, most times you gotta trade maybe like 2, 3, 4 5 times every month, every week, sorry. Like, I think the minimum most times you see day traders, I think minimum is 2 times, right? Minimum is 2 times that you see day traders. Other day traders, they tend to trade almost every day, right? Even though that's not fully recommended, but yeah, right? Yeah, so that's it. That's it. So for day traders, some days will be good, some days will be bad. Every day can't be good, right? Every day can't be good, and every day can't be bad also. If every day is bad, there's a problem, right? And then for day traders, some prefer taking just one trade every day, some prefer taking 2 trades, some prefer taking up to 5, 6, 7 trades, right? But then if you start crossing 7 trades and you are now going into the area of 20 something, then you know you are doing something wrong, right? Because normally on a standard, you shouldn't cross 7 trades a day. You shouldn't, right? You shouldn't cross 7 trades, right? You should just stop at, let's say, within the range of 5, 6, right? That's okay for a day. You shouldn't cross that. And then if you want to go and just take only one trade, well, it's good, but I don't really recommend that a lot of times, right? You can take, let's say, at least 2 trades, right? In case one doesn't go very well, the other will back it up for you and things like that. So that's how it works, right? That's how it works. So basically, yeah. Now, and then when you're taking this trade, the most important thing when it comes to day trading is this: you want to be able to spot out all the internal levels around the chart. You want to be able to spot out all the resistance levels. Of course, there are a lot of complicated stuffs there that it is a whole MC100, it is a whole course, right? But then we can't really dive in like that because, well, you already know how much time we spent on this stuff already, beginner to pro level trading. So that's on the special MC100 course already, with the season 6 will be registration will be starting in January. So we can't really dive into that like fully. But then we just look at just the normal standard basics that you need to know. So first of all, let's say just look at the normal standard of external levels, like your normal resistance here and your normal support around these particular levels. Now you want to map out the spot, and then where you want to place in. Okay, let me just quickly tell you something. Now, if you miss one particular stop, you can always take losses almost all the time if you miss one particular stop. Now, what that stuff is that if you miss the spots to actually place your take profit or the spots to actually place your stop loss. Now, the reason for that is if your take profit level is too high, your trades can go very, very well, but might not hit your take profit, and they will start reversing against you, right? And then you don't want that. And then if your stop loss is too low, that's you didn't give the chart any breathing space at all. It can always hit your stop loss, and you think you had a problem. Oh, it's always hitting my stop loss. It's very bad. It's always hitting my stop loss, right? And so what you want to do is you want to place your stop loss just at the exact level, and you want to place your take profit just at the exact level. And the levels to place them is actually basic. In fact, that is categorized under the beginner level. Let's just take it on the pro level. Is okay. Now, that's categorized like that. So the levels that I just want to place my take profit, I want to look at the levels above it that are what you call resistance levels or my horizontal levels. And those levels are where I want to place my stop my take profits, right? And then the levels below it, let's assume we're buying, where I'm assuming that we're buying, yeah, yeah. So and then the levels below it are the regions I want to place in my stop losses, right? So I want to, let's say I'm going to this trade as about this spot now. This will be my first take profits because this is my first horizontal level. And then my stop loss will be just at about the spot, right? Around this particular region, right? Because this was actually my first this was actually my first resistance level at about the spot, right? Now that's actually how it works. And then if this is my first take profit, I will just come to this place and look for, let's say, my second take profit. And in this case, this is actually nice that we don't even have it here. It even makes sense because if we had it, I possibly would have forgotten what I'm about to say now. But then in case you don't see this stuff, you don't see any other level around this region where you can actually track your second take profit, it's easy. You just simply you just simply do 2 things. Number one, you can decide to leave all your take profit levels open because you already have one take profit hit. You can decide to leave the rest open, and then you just start locking in your profits. That's you start trailing in your profits. It pushes up, you lock it in, it pushes up, you lock it in, it pushes up, you lock it in until it finally drops down and hits your trail stop, and then you would have made far more profit than if you just run out of the trade like that. Right now, that's how it works. So it pushes up, let's say it pushes up to a particular extent, right? And then now okay, let me put that there. And now, well, this was actually a first take profit, right? So it hit a first take profit. And then what I want to do, I want to drag it now, and then it start pushing. I want to drag it to a spot and keep dragging it like that until finally it hits my, what you call it, my trail at about this spot, my lock at about this spot, and then it takes me out. But I would have made all this profit. Now that's the first version. The second version is that you can simply just multiply your pips by any amount that you want based on the volatility of the chart. So unlike this chart, this particular chart is actually very, very volatile. So I want to maybe multiply my pips by 2. So the amount of cash that I made from here, let's say from this particular spot, let's say I went into this trade at this particular spot, right? So I just want to, the difference of the pips here, I want to check out how this chart is moving. If it, like this one is very volatile, you can see a lot of bullish candlesticks just creating and extremely fast like that. So I want to multiply this stuff by, let's say, by 2 or 3. So my next take profit level will now be, okay, let me just use this. My next take profit level, this will be like by 1, and this will be like by 2. So my next take profit level can just be at about this region. And then after that, if I see that the chart is still kind of like very volatile, I can decide to repeat just same thing. I can decide to repeat same thing. So the next one will now be maybe at about this region, things like that. And then I can just keep repeating same thing like that. And then all my TPs should be hit like that. Even though all the TPs are not hit, it's actually still okay, because I would have hit one TP already and I would have locked my profit already. Now, so that's how it works. You place in your normal 3 take profit levels. Maybe as the first one is hit, you lock in your profit. In case the second and third take profit are not hit, you lock in your profit. When it pushes up, it hits your second take profit. You repeat same thing again. You lock in your you lock in your profit again. It pushes up and hits your third take profit. You lock in your profit again, right? Now, if you don't want to lock it in, just simply watch the chart, just like we do on YouTube. We watch the chart, every process of it, so that in this case now, if it was, or if we were recording a video normal, when this stuff is pushing up, it made us to see that this particular stuff is giving us a lot of bearish engulfing formation at about this spot. We can easily just zoom out of this particular trade. So that's just how it works, right? Now, yeah. So that's what that. Now, okay. So what else can we look at now before round up? What else can we look at now before round up? I don't want to go into full scale analysis and the rest of them because the time just won't be enough. That's under MC100. That's under MC100 completely. But then, okay, let's look at this particular level. Let me just give you one major stuff that you can use to cash out from the markets just casually anytime you want. And then after that, I guess, yeah, we should call it a day. Okay, so let me just give you that. Okay, now look at this particular stuff now, right? Now we're actually having this particular chart around this region, right? It seems like it's going up at the same time. It seems like it's actually giving a form of consolidation here. Now, so what am I going to do? I'm just going to come towards particular spot and then okay, yeah, and then I'm just going to maybe draft out this particular stuff like this, right? I'm going to draft it out like this and draft it out like this. Okay, excuse me. Okay, now let's go. And now let's say I place it like this. Now, what am I looking at now? I'm looking at this particular stuff. It's playing around and then it hits this my particular level at about this spot, and then I map out this my chart at this spot, right? Okay, that's what I should have done, right? Good. And so this particular stuff drops down again towards this particular zone. Now, if you look at this particular stuff, you notice something is not right at this spot, right? Now, what's not right is this, is that we actually had a rejection at about this spot. This chart was dropping down, it hit this particular level, and so it got rejected. Now, because of this rejection, this particular chart actually actually pushed back up again. So what am I supposed to do? I'm not supposed to draw it like this. To start with, I'm supposed to draw it like this instead. This is supposed to be this is supposed to be a horizontal level. Now, what am I trying to tell you? I'm trying to tell you that there are some stuff you don't draw right correctly, right? And because you don't draw it correctly, it can actually lead to a lot of losses, right? So you want to make sure that you draw every single stuff correctly. But then that's not what I'm trying to tell you. What I'm trying to tell you is this, is that when you're checking out the chart, you want to make sure that you map out all the levels where you're having rejection, what we call the rejection levels, right? The area of rejections. Now, if you can map out all the area of rejections, trading will actually be very, very easy for you. Like, it will actually be extremely easy. It should just literally be very, very easy. Now, what I mean by that is this. There was a rejection here, rejection here. And here, if you notice at about this spot, there are always rejections, right? Always at this particular spot. So I want to put, okay, let me take that out. I don't want to use that. Let me use this instead. Okay, so I'm using this. Now, at this particular spot, there are always a lot of rejections at about this spot, right? Now, look, all I'm doing now, I'm just mapping all the areas of rejection, right? Now, in trading like this, I don't need to, what do you call it? I don't need to stress myself at all, right? I just see rejection, rejection, rejection around this region. All I just wait for this stuff is to drop down, hit my level of rejection, and then I'm out of the trade, right? Hit my level of rejection, and I'm into the trade, right? So like this spot now, of course, this particular stop just hit. This was actually the second level. So usually we draft that trade from second level. So this one won't be here, right? Because when we're drawing trend line, for example, we have to map out two levels, right? We need to have 2 points, first and second points, and after that we draft it out. So for this particular one, these are first, these are second, and then we draft it out from here. Anytime it hits our rejection level, we want to buy. Anytime it hits our rejection level, we want to buy, just like that. So in this case now, it actually hits our rejection level. We buy in, we storm into this particular trade, we place a stop loss with a little bit of breathing space. It pushes up, and we just place maybe a first take profit at about this region, and this particular spot as our second take profit, just at about the spot. And so just gradually like that, we're able to catch a first take profit, and after that, we're able to catch our second take profits just at about the spot, just like that. So guys, basically that's just it. There are not a lot of analysis we can do here, right? In normal case, in a normal scenario, we're supposed to cover things like internal resistance levels, right? Number two, we're supposed to cover external resistance levels. Number three, we're supposed to cover X formations, that's our X durations and X formations, right? Number four, we're supposed to cover order blocks level. There are about 5 different order blocks levels, which we cover a lot of times on our MC100. Now, number six, we actually cover all this auto cleaning. We actually cover all the major levels of manipulation, right? All the manipulation zones and all of those particular stops. Number seven, we're supposed to cover things like auto cleaning. Now, as scalping levels, that's all the levels you see where you shouldn't really hold the trade for a very long time. Number eight, we calculate the exact time we're supposed to spend in a trade and the exact time we are supposed to storm into a trade, right? That's what we are supposed to do. We can calculate that. And so we know that this particular trade is going to last for exactly 30 minutes, and this particular trade is going to last for, let's say, exactly 40 minutes, or it's going to last for exactly 1 hour, things like that. Right now, number nine, we're supposed to be able to calculate, we're supposed to be able to calculate when a lot of traders are actually storming into a particular trade, right? That's when a lot of traders are trying to buy in the trade, that's retail traders. And so, of course, you know things like that. If there are no institutional traders around the region and they are just only retail traders, we know what will happen. It usually goes against that, because that's way, well, the institutional traders will actually have to make a lot of cash from there, right? So because of that, we are supposed to cover how to detect those particular regions and how to know when to leave the trade, or how to know when to storm into the trade with the market makers. That's what I'm trying to say. And in that way, when you are cashing out from the market, other retail traders will actually be, they'll actually be donating their money to the broker, so the broker can use it to pay you, right? So that's actually the number nine. Now, the number 10, we're supposed to look at all the major, we're supposed to look at all the major levels where we should never take a trade, right? Because there are a lot of levels where we can't even go into any trade at all, right? A lot of levels, really a lot of them, right? Now, is it number 10 now? So, but then we're also supposed to look at autoclean it now, all the regions where we can actually storm into the trade for flipping of accounts and things like that. I actually just explain to you how to detect it, or how to classify the strategies and the rest. But there are actually ways where you can easily just check out the chart and detect that, okay, on this particular region, we can actually perform some flipping of accounts even without going through all the 1, 2, 3, 4, 5 strategies and the rest. When you see it, all of those levels, most of the time, they always meet up to all our criteria, but time won't just allow us to cover those things. It's why they go to MC100, because that's the whole duration of a course. Right now, we're also supposed to look at all the maximum range and all the maximum regions of sniper entries. Right, that's a particular level. If you notice, we go into trade sometimes, and then the trade start pushing instantly in profits and things like that. Of course, you can still go and hit a stop loss, but then we can easily just go into another trade, and then we can easily recover. Right now, that's for that. And then the next, which I think should be the 13 or the 14 now, we are supposed to look at also the recovery mode trading, right? That's after you've taken some trades and then you actually took some losses and losses. If you notice, we had a series of trades like that on a normal MM150 when we went into our recovery mode trades. Now, we are supposed to cover that also, but time won't let us. That's also on our MC100 class where you're actually taking losses and losses, and then you actually pause and wait for some certain key levels of the chart, and then you run into what we call a recovery mode. That's you actually pick out back every single cash that you would have lost within a period of time. You actually make everything back with just a single trade, right? Now, that's also it. Now, there are just a lot of stuffs that are enshrined into the MC100 course, which we can't really cover here. But then the mission of this class has already been covered. It's just to brush you through from beginner to pro level trading. So guys, I guess that's it, guys. I guess that's it. And so yeah. So if you have any question, it's better not to drop it on Telegram. You can drop it on our email also, right? It's just better dropping it on the email. If you drop it on Telegram, support will respond to you there. Your message will just be open and ignored because that's the support. They can't really respond to you. So it's just better you drop it on the email. So you just go on Mr. PFS World at gmail.com, or okay, maybe not that. You can send to that also. I'll send you an email that's faster on the Telegram channel. So in case you have any questions, you can send the questions there. I'm going to drop the email there. It will just be faster. If you send to the first time I mentioned, well, you might not get a response because the support is actually the one that responds to messages there. So you might not get any reasonable stuff. Your email might never be responded to. So yeah. So guys, that's just it for today. It's a bye from guys. I'm Mr. P. Peace.